So I'm going to quickly introduce the panelists and run through the program for today. After my remarks, we will be joined by Senator Shelley Mayer, who will have some opening remarks. Senator Mayer represents the 37th district, representing large portions of Westchester County, including my town of Harrison. And Senator Mayer also chairs the Committee on Education and sits on numerous other committees, including the committees of corporations, authorities, and commissions, and housing, construction, and community development. From the State Department of Labor, we have Susan Moreno. She's a workforce program specialist at the New York State Department of Labor, and she will share a PowerPoint and walk us through the shared work program. And then, of course, we have Donna Hager. She is the founder and CEO of Mason Deave, which is a professional engineering and architecture firm serving both the private and the public sector. Mason Deave is a certified women's business enterprise and Section 3 business concern, and is also a Westchester County Association member. Donna has used the shared work program for her own business to help both her enterprise and her employees, and she will speak with us about her personal experiences with the program. So after Senator Mayer makes some opening remarks, I'll turn it over to Susan at the Department of Labor. There will be a brief video, I think, that describes the program, and then Susan will walk us through a PowerPoint presentation. After that, Donna will go through how it has helped her business, and then we'll open up the floor for some Q&A. And with that, Shelley, Senator Mayer, please take the floor.
Thank you, Michael. Thank you very much for your leadership in the Westchester County Association. You know, this is a very exciting moment for those of us who think that there are some paths out of this very challenging time. Shared work is one of the very positive opportunities for small business to survive during a most challenging moment. And because we on this call, the panelists and those who organize this, really believe that we have to make use of every opportunity to keep people working, to keep our businesses going, and to get our economy back on track. I know for me, I heard about shared work. My husband has a small business, participated, and I realized through this program, he could keep his employees on. They were also eligible for unemployment, and he could keep his business going during this most challenging time. And I reached out to Commissioner Roberta Reardon and her staff, who have been fantastic, and recognized that this was an opportunity to let as many people as possible know about this great opportunity. Nothing is perfect in this moment, but when we have something good to share, we want to make sure it gets out there. So I reached out to Michael, and with the help of Tom Scaglione and the great staff of the Department of Labor, and special thanks to the commissioner, we were able to put this together and make sure that everyone knows about and gets their questions answered about the shared work program. I want to also particularly thank Donna Hager, as Michael mentioned, from Mason Deave. I think I got it right this time, pronunciation-wise, because she really will tell her own story of why this program provided an option for her. We know we have to figure out some paths forward to get our businesses, small and large, and to get our workers back into the workplace. As someone who represents communities that have been so hard hit by this, whether it's Yonkers, Portchester, the Sound Shore, New Rochelle, White Plains, all of our communities in Westchester, a tremendous blow to our economy. We need to use this lesson and this opportunity to see if we can move forward. So I'm very grateful. I look forward to hearing the specifics and specifically hearing questions answered. And with that, I think I am going to introduce, am I right, Tom? A video from Commissioner Roberta Reardon, the Commissioner of the Department of Labor, giving a brief overview of this program.
Yes, thank you.
Hello, I'm Labor Commissioner Roberta Reardon. If you are watching this video, it's because you own or run a business that may be looking for some creative workforce solutions during this economic downturn. The DOL's shared work program may be exactly what your business needs. This program is designed to help employers manage difficult business cycles while helping to spare their workers the hardships of full unemployment. Here's how it works. Your employees work a reduced schedule and collect partial unemployment insurance benefits for up to 26 weeks. And most importantly, it won't affect your business's experience rating. It's an alternative to layoffs. And if some employees have already been furloughed, it allows you to bring them back on a reduced work week. This program keeps trained, productive employees on the job during temporary business downturns. And it means you can gear up quickly as your business starts to improve and grow again. You save the expense of recruiting, hiring, and training new employees, and you spare your employees the hardships of full unemployment and loss of personal benefits. When you avoid layoffs and can bring them back to work sooner, you are telling your employees you appreciate their work and want to keep them working despite tough times. More than 3,000 New York businesses are already enrolled in the Shared Work program, including over 260 businesses right here in the Hudson Valley. Here's what a few of them have to say about how important Shared Work has been to their continued operation.
Shared Work, in our opinion, International Wire, is an excellent program through the Department of Labor. In manufacturing, our business ebbs and flows, and when we hit those valleys versus those peaks, it allows us to keep a full workforce without having to lay people off and then try the rehiring process.
It is an opportunity for the employer to save money on payroll without having to fully lay off or furlough your employees.
It really benefits the employees. They're able to keep their benefits, and when they come back, they're geared up and ready to go full throttle for our next busy cycle.
For our company, without the Shared Work program, we would look at about 50% less employees in our company right now. So through the program, we've been able to maintain 100% of our employees by utilizing the Shared Work program to its fullest extent.
I would recommend businesses definitely look into it. The Department of Labor staff have been so accessible and very helpful answering all of the questions. They're there to help us, and you really feel like they're partnering with you to make sure this works.
To apply for the Shared Work program or to see if it's the right fit for your workplace, visit labor.ny.gov/sharedwork. We are your DOL, building and supporting your business.
Good morning, everyone. So I just want to take a moment while we're getting the PowerPoint started to thank both Michael and Senator to having us talk about this very, very popular program. We're excited. We really appreciate all the kudos that everybody's given us. We worked really hard to kind of get the word out on this program. So thank you again for inviting us to participate in this event. So on behalf of the New York State Department of Labor, I want to thank again the opportunity to present on our popular Shared Work program. I'm also joined by my colleague, Thomas Newman, who is the Assistant Director of Unemployment Insurance Employer Liability Services. He's going to be here to help us with any technical questions that we may come across. But today we're going to provide you with a high-level, informative overview on the Shared Work program, and we'll have time for questions at the end. Here's an overview of what we'll be covering today. Looks like a lot, but it really isn't. So I'll just give you a minute to kind of briefly look over the contents. So let's just jump right in. What is shared work? So I'm sure many of you, especially during these times, have heard of the unemployment insurance program. Just to give you a little bit of history on unemployment insurance, in the recession of 2008-2009, we had around 300,000 unemployment insurance claims. And since COVID, we've processed over 4 million unemployment insurance claims. Shared work is a program under unemployment insurance. We look at it as a type of employment insurance, though, a smart alternative to layoffs. So basically what the program is it helps you keep your valuable employees on board through a rough patch. It's an ideal program to use for temporary downturns. But a lot of what businesses have used it for throughout the pandemic is a way to reopen, to bring people back from unemployment insurance. Most businesses are eligible. To apply, a business would need to have at least 2 full-time employees and have paid unemployment insurance contributions for 4 consecutive calendar quarters. And just like it sounds, the program is called Shared Work because the work you have is shared among those employees. So we're obviously going to hear from Donna later on, but let's just look at another, wonderful testimonial that we've received. But before that, I just want to give you an idea on how largely this program has grown. Back in 2019, there were less than 200 businesses that use this program. And as you can see here on the screen, since last week, we had over 3,000 employers with active shared work plans, and 262 of those employers are in the Hudson Valley region. Here's what one business had to say. With the COVID-19 epidemic, it has impacted our sales, and the shared work program through the New York State Department of Labor has helped to retain our employees during the time we reduced our employees' hours. The program explained by Maddie Christensen was very easy to implement and roll out to our employees. We were very thankful that she reached out to us at a time when we needed it the most. So as you can see, it's just a testament to how great people think this program is, especially during these uncertain times. So now we'll go into how shared work can help your business. Well, it can help your business by maintaining and assisting businesses during slow periods, but obviously, as I previously stated, during reopening during the COVID-19 pause. It helps your business by avoiding layoffs of valuable employees and also allowing employees to retain their fringe benefits like healthcare and pensions. So I just want to touch a little bit more on that last bullet, because one of the eligibility criteria with using the shared work program is that employees do need to remain whole with their fringe benefits, even though they're being reduced. This also increases morale. It shows employees that they're valued, which in turn helps your productivity. Another benefit to businesses, and this is a new incentive under the CARES Act, is that there's no extra cost to employers. It will not affect your experience rating for benefits paid to both full and part-time employees through December 2020. Reimbursable employers won't be charged for full and part-time employees through December 2020 because the federal government is paying 100%. Again, just keep in mind that this is an incentive under the CARES Act. So it's a new benefit to employers, which seems to have been going very, very well. And I think a lot of people are taking advantage of it because of this. So let's talk a little bit about how losing employees is so costly. Current employees have valuable experience, and on average, it costs anywhere from 6 to 9 months' salary every time a business replaces a salaried employee. So as an example, if you have an employee making $40,000 a year, $20,000 to $30,000 of that that equates to $20,000 to $30,000 in recruiting and training expenses. But other factors to consider when you lose employees is lost productivity, having to use temporary workers or paying overtime, and also the reduced morale among the remaining employees. All right, this is very important because the shared work program is very, very customizable for your business and your business needs. The program is very flexible. You determine which employees will be on your plan as long as everyone in each unit is sharing work and reduced by the same percentage. A plan can include as few as 2 employees per unit, and you determine the weekly reduction as long as that reduction is between 20 and 60%. So let's just back up a little bit. The plan is set up by management or whoever you designate to set up the plan. They designate 1 or more units to participate based on the needs of the company. The plan's in place for 53 weeks. So once it's approved, it stays in place for 53 weeks, and each employee can participate for up to 26 weeks during that period. And I just want to take I want to emphasize that point because I'm sure a lot of people on this meeting today have heard about the extensions on unemployment insurance. This program has not received any of those extensions. So although the plan is in place for 53 weeks, a participant can only claim benefits under shared work for 26 weeks during that period. The weeks do not have to be used consecutively, and different units may have different percentages and reductions. So I'll just give you an example. Let's say we have 2 units. We have unit 1 and we have unit 2. Both units have 5 people in it. Unit 1 is being reduced by 20%. Unit 2 is being reduced by 40%. Unit 1, all 5 people in unit 1 need to be reduced by 20%. You can't have 2 people reduced by 20 and then 2 other people reduced by 40. Everyone in that unit must be reduced by 20%. It's not to say that you can't move around your units or make some adjustments. All of that can be done. But once you have people in units, everyone must be reduced equally. So a couple of other points that I'd just like to make is, and I believe that you're going to get resources at the end of this, and we'll open it up to questions, but just a couple of other points that I would like to make is that if employees are represented by a union, the union must also sign off on the plan. Also, you cannot add staff to a unit that's actively using the plan unless you have a participating employee resign. Then you may backfill the position. Plans start on Mondays, so we always encourage businesses to get their application in earlier in the week so that we have time to review it. But we are expediting these applications and we can generally turn them around within 48 hours. We have some great staff on board, so we're happy. We're very, very excited about that. All right, let's just take a look at an example of how one business might set up their plan. So let's say a business is facing a 20% reduction. That would usually mean that they would need to lay off 1/5 of their workforce. Under shared work, the firm would retain their entire workforce on a 4-day-a-week basis. So workers would receive wages from their employer, and then they would also receive unemployment insurance benefits under the shared work program to supplement that money that they're losing. This is just one example though. Like I said, it's very, very flexible program. Some businesses may choose to maintain a 5-day work week and simply reduce the percentage of total hours worked, or have certain staff assigned to particular days. It's easy to use. So everything can be done online, which is nice, obviously in this day and age. So the application can be done online. Once it's approved, there's online management. You can change your percentages. You can move people on and off of the plan. And like I said, the plans are generally approved within 48 hours because we have some wonderful staff. And there's also support always available by our program experts. How does shared work benefit the employees? Well, obviously the first one, they avoid a full layoff, which is amazing. They also retain their fringe benefits, as I previously stated, and they will receive a percentage of their benefit rate, 20 to 60%, in addition to their reduced pay from their employers. The last bullet, they do not need to look for work while participating in the shared work program. The reason why we mention this is because under unemployment insurance, one of the requirements is that individuals need to look for work. This is waived under the shared work program. Another point that I'd like to make is that in order to be eligible for shared work benefits, a person must also be eligible for unemployment insurance. So what does that mean? It means that they need to have enough wages to establish an initial claim. So if you have new employees that you just brought on board, they may not have enough wages to establish a claim. It's not to say that you wouldn't be able to participate in the program. It's just that they would not be able to participate until they have enough wages to establish that initial claim. And again, we're going to get out information to you, and we're always available for questions. So I know a lot of this information, might sound a little confusing, but that's what we're here for, is to kind of walk you through the process. So how does an employee file for a shared work claim? The employee files two ways. They can either file online or over the phone. Then once their claim is initially set up, they would certify for weekly benefits, and this is done online only. So I'll give you a little background. Previously, people used to be able to certify for benefits by paper. With the substantial growth of this program, we had to move everything online because it's just more efficient for staff, but more importantly, it's more efficient for employees because now they're paid timely. If a person goes in and certifies themselves weekly, they get paid within 2 days from the time that they certify online, versus when the paper came in, it's very time consuming. And we also had employers who would spend almost 2 days of their work week filling out the paper certifications, because both the employer and the employee needs to certify. So it's certainly helped. And I'll just give you some percentages. Prior to us switching over to online certifications, we were at about a little over 60% of people were filing by paper, and now we're down to about 10% are still filing by paper because we have some people who, if they miss a week, they do have to certify by paper, unfortunately. But we are working on some solutions around that. So in summary, the biggest thing I can say is how flexible this program is. Again, you only need 2 full-time employees to be eligible for the program. And businesses, just like I said, businesses of many sizes can use this. It's in place to help both businesses and workers. Think of it as employment insurance, a way to retain your skilled workforce, especially during these uncertain times. Here's some contact information, but again, like I said, I believe there's going to be information sent out to everybody. We have some nice fact sheets and contact information, but if you have any questions, we'll take those after we hear from Donna. And I just want to thank everybody again for allowing me to present on this program. Very passionate about it, very excited about it, and happy that we can share it with you nice folks. Thanks again.
Thanks, Susan. And we do have a lot of questions, which we'll get to after we hear from Donna. One quick question for you, Susan, before we hear from Donna, is now that the economy is hopefully starting to open up again, and employees who have been previously laid off or let go are starting to come back, how does that dovetail with the program? Can you use this program as you're onboarding employees that have been laid off during the pandemic?
Absolutely. A lot of people think that because of that once, the one stipulation in there, that you can't hire people to put on the plan. But if you're hiring previous employees that have been on unemployment insurance, that's what a lot of businesses are doing in their reopening strategy is and you don't have to bring back everybody. If we had a couple of restaurants who they could only bring back a certain amount of people off of unemployment insurance. So they set up their units. And just keep in mind that the units do need to have at least 2 people per unit. You can't have a unit of 1, but you can certainly do it. You can certainly do it that way.
Thank you, Susan.
You're welcome.
And Donna, now let's turn it over to you. I think when we spoke previously, you described this as a lifeline for your business and how incredibly important it was for you to continue operations and protect your workforce. So why don't you tell us about your experience?
Sure. As everyone heard, I'm Donna Hager, a licensed professional engineer and founder of Mason Deave. As an essential business, we provide architecture and engineering services to support major public infrastructure projects in the New York metro area, such as the Jacob Javits Center expansion project, Newark Airport Terminal 1 redevelopment, and energy efficiency upgrades at several New York City Housing Authority developments. As Michael mentioned, Mason Deeb is a certified woman-owned business and a Section 3 business concern, which means that 30% of our workforce are low-income housing residents seeking careers in construction management. My biggest pride to date at Mason Deeb is our workforce. And together we experienced an amazing year in 2019 with a 147% increase in sales, and 2020 was looking even brighter. In February, we were heavily recruiting and looking for larger workspace in White Plains. Then in March, we paused, along with the rest of New York State. From March through June, we were fortunate to keep all employees on payroll through a combination of retained earnings, PPP funding, and EIDL. And I'm extremely grateful to the United States government and legislators for what was accomplished in record time to support small businesses like ours. But in mid-June, we were running out of money and our backlog was slowing down. So we had to move quickly and figure out a plan B for payroll. I wasn't really sure what to do next. Thankfully, another small business owner told me about the New York State DOL shared work program. I looked into it, liked what I read, contacted DOL with questions, and joined within hours. The DOL website is user-friendly and had all the information I needed as an employer, along with all the details that I needed to share with our employees. The DOL representatives were extremely helpful. They answered all my questions and did a great job at explaining how the program worked. The entire process was straightforward and trouble-free for both me and our employees. My three major take-home messages from the shared work program that I want to share with you today are: one, our employees felt secure on a reduced work week. They knew they had a job. They knew they would receive a weekly paycheck. And most importantly, they knew they would keep their benefits. Two, as CEO, I had hope. I knew I could keep trained employees on staff during the downturn as we patiently waited for our projects to start up again. And three, as a team, we are now ready and able to gear up quickly to once again generate revenue with the same staff, since our backlog is finally increasing. So in summary, the shared work program has been a huge help for us, bridging a payroll gap. We were still working our way out of COVID-19 impacts when we exhausted our PPP funds. New York State's program helped keep critical staff, and without them at the firm today, we could not deliver services to our clients. I'm extremely grateful to our legislators, the New York State Department of Labor, and the WCA for providing much needed leadership and solutions throughout this period. I encourage every business to look into the program because it works. Thank you.
Thank you, Donna. And I have a couple of quick questions for you. We've got some questions on the screen as well, but who pays for the employee benefits, continuing those like healthcare, retirement, and things like this under the program?
Mason Deeb does that.
Okay, so the employer continues to carry those benefits.
Yep.
And you guys had a choice. You could, I mean, as the work demand cut back, you could have simply laid off a portion of your staff instead of spreading the work around amongst the existing staff without laying anybody off. Why was it important to your business to do the latter rather than the former?
Because we're a team. You know, everyone worked so hard to get where we were, and we were exploding. And I just felt it was the fair thing to do. It was the only thing we can do at that time. Everyone is critical right now to the organization because we're so small. So it was an easy decision, just it was hard to figure out. But once we figured out how to do that, the rest was easy.
Yeah, and the other thing I might add, Donna, as someone who used to run a corporation, is it's mostly more expensive if you lay somebody off to find new people to fill those positions. So from a purely financial perspective, it makes a lot more business sense to keep your employees on staff rather than having to replace them during some sort of a downturn. Now, before we get to the questions, Shelley, I just wanted to check in with you to see if you had any top line thoughts at this point.
Well, one is it's really great to hear from Donna about how she sort of made the program work for her. And I'm so happy about that. And also her recognition, I know we have some of our friends from organized labor on here today, that the employees were an essential part of her business, that there really was a collective effort. So I think that that's one of the values of this program as someone who's a friend of labor, as well as making sure business survives. This is sort of a win-win for those. That being said, this is complicated, and Susan's description made clear it is. There's a lot of good questions. I have questions, but I'm going to defer to our participants. I think one of the points that Susan made that's important, and one point she didn't make, if the person is on this, an employee is on the program, and there's an additional benefit in UI, like there was the 600, and now there is the 300 for a short period of time, that person gains the benefit of that supplement as well. So if the 300 per week continues and the person is on unemployment, they're getting your reduced salary, they're getting their UI benefit, and they could be getting that supplement. So that is really a lifeline to many of our employees, and we're hopeful that that can continue. So with that, I will defer to the participants who have a lot of really good questions here.
Okay, let's take a look at some of these. We have one from Maria Imperial, who runs one of our fantastic regional YMCAs and YWCAs. And the question is there an income limit to benefit from the program? For example, can executive staff be on a shared work program? And that's a question, Susan, for you or for Thomas at the DOL.
Sure. And I'm going to have Tom come on over so that we can kind of jointly answer these questions. But yes, there's no income limit for shared work. So as far as I know, executives can be on the shared work program. There's different criteria under unemployment insurance versus shared work. Under unemployment insurance, there is an income limit. So that's that $504 a week. If you make $504 a week, then you would not be entitled to unemployment insurance benefits. But that's not the case under shared work. Tom, did you have anything else to add?
No, that sums it up pretty well. With regard to salaried individuals who might normally work a lot more than 40 hours a week, the cap or the base from which the reduction would operate would be a 40-hour week. So that's worth keeping in mind.
What about limitations on company size? It was mentioned that employers must have at least 2 full-time employees and paid for unemployment for 4 quarters. But is there a maximum number of employees that would prevent a company or nonprofit from participating in the program?
There's not. The only stipulation is that you do need to have 2 people per unit. So you can't have a unit of 1, but there's not a maximum amount.
Okay, I also see that there was some confusion over the concept of a portion of unemployment benefits and how that relates to the percentage of work or the hours that were cut back. Something of between 20 and 60% of uninsurance can get paid. Can you maybe flesh that out a little bit more?
I can. I actually brought an example because it can get a little confusing. So let's say a person earns $400 per week and they were totally unemployed. You could receive under unemployment insurance. If you were just doing unemployment insurance, it would be $200 a week that person would get. Under shared work, let's just say the wages were reduced by 20%. The person would receive $320 in wages from the employer, and then they would receive 20% of that $400, which equals $80, and $40 in shared work benefits. So that's 20% of the 200. So that person would receive $360 in shared work benefits versus if they were on total unemployment, they would get $200. So it's a portion of the unemployment insurance benefit rate that they would get on top of the wages that they're getting from their employer.
And how often can that calculation change? Do you make that recalculation every unemployment cycle or every quarter or what?
So the maximum benefit rate for unemployment insurance right now is $504. And that's based on, how many wages that you had over the previous, is it four quarters?
Yeah, it's actually a little bit more complicated. And I assume most people probably won't want the full details. Basically, it's a 4-quarter period that can go back up to about 1.5 years prior to the filing of the claim. But the benefit rate is established for each claimant when they file their claim. And the claim is in effect for 1 year, and then they would, potentially need to file a new claim, and there would be a new benefit rate based on their earnings in the then relevant period.
What about the percentage of time? Like, let's say you had your workers who are spending 40% of the time working, and then you needed them more and it was 20%, and then maybe it went back to 30%. How often can that calculation change?
It can change. It can change from week to week. That's how shared work was used previous to COVID. That's why it's in place for 53 weeks. There's businesses, I can remember years ago when businesses would sign up for the program just in case they had a downturn, just in case they had a reduction in production. They would have the plan in place just in case. That's why we think of it as employment insurance. So, that's why you don't need to use it on consecutive weeks. There could be 1 week where everybody comes off of it completely because business has picked up. But you have it there. So if you do need to jump back into it, it's there.
That's a really good point, because as most of the people tuning in today know, this program has been around for well before the COVID pandemic struck and the CARES Act was passed. It'll be around long after some of those temporary benefits from the federal government end. And this can be used for cyclical businesses as well as businesses that are just impacted by a financial downturn in the economy.
Right.
Michael, I'm sorry, can I just point out that some people have asked sort of, is there a one-pager, particularly that went through the particular example that you just gave with the actual calculation, so you can figure out what it would cost you and how it would benefit your employees. The one-pager I think would be very helpful, but I do want to make the point that, and you're going to give the number, you can actually call a real human being at the Department of Labor who can walk you through for your own business how to do the calculation. They're, as compared to challenges with the unemployment, in this shared work program, there is designated and separate DOL staff that can help each employer deal with the challenges of their own situation. So no one should feel overwhelmed, and be confident that they can get specific questions with respect to their employees.
Thanks.
Yes, that version of this, we will be sending out the presentation along with all of the FAQ and all of the information pages that lead to this program. So it'll be very helpful.
And the DOL does have a one or two page fact sheet right on their website. If you just search for that, it's right there. It's a great question.
It's in the chat now. It's in the chat.
Yeah. Okay, a lot more questions. Let me see if I get everybody here. There was a very technical question about how this works as compared to a WARN Act notification. The WARN Act notifications have to go out when there are circumstances of mass layoffs. And in the chat, they're bringing this person looks like they run a fitness center, and they're bringing back some of their furloughed staff in waves. And so they can't bring everybody back all at once. And it looks like, they furloughed a portion of their part-time staff, and, can they bring back the other half that are still on furlough under the shared work program? So it's a pretty technical question, maybe a little bit too technical for a quick answer, but I see Tom has entered the screen, so we're all saved.
A popular demand.
So I want to know, and it's from Andrea, it looks like.
Andre,
Is it Andre?
I think. Oh, Andrea, you're right.
So I think I need a little bit more information on that, because we do oversee the WARN notices as well. It might be a question that we might need to do a little research on, but I'm curious to know if she means, does she have to continue to send in revised WARN notices because she still has people out? So I just need a little bit more information. Can Andrea, is she still on? Can we hear from her?
Well, maybe it makes sense, Susan, for you to just make sure your contact info is chatted to everybody so that she can reach out to you
That's
and have a sidebar about that.
Yeah.
But you can, if the question was, you can bring, and I hope that answered it previously, you can bring people, if you can only, you know, because of capacity wise, you can bring certain people back, and then also have a number of people still on full unemployment. That is acceptable. But the WARN part of it, we can certainly tackle that too.
So Andrea, we will make sure that Susan and her team, that they reach out to you directly.
Absolutely.
Okay, a question from Peggy Brunetti. What is the difference between shared work and furlough? How is the unemployment experience rating affected in both?
So let me take this one, I think. And, so basically, well, furlough isn't a term that we generally use exactly in unemployment insurance. You know, we've been calling shared work and unemployment insurance different things, and they're different programs, but actually shared work is a subset of the unemployment insurance system. So there are slightly different rules, and for those of you that have had experience in the normal unemployment insurance system, you'll hear some of this and recognize that it's different, but it's actually just a different section of the unemployment insurance law. So the benefits that are paid out for most employers, for what we would call contributory employers, the normal employers that pay into the system as they go, the benefits that are paid out are then applied against their account. They're essentially just a bookkeeping device that's used to calculate their unemployment insurance rate. And that's the same for shared work as it is for regular unemployment insurance. Now, traditionally, shared work, you know, you see it used a lot with, say, a manufacturing type environment, that kind of thing, where there's a cyclical component to it. And in those cases, the you know, the person, as Sue indicated before, you know, might use it for a little while and come off of it and use it a little bit more. They do that knowing full well that that's going to have the same kind of effect on their rate that, you know, unemployment would if they had to lay people off. But of course, you've got the flip side benefits that you're not having to actually lay people off and disassociate them from your company.
Thanks, Thomas. Here's a question for Donna. Henry has asked, you know, whether he can find a consultant to help him through navigating the application process. Now, Donna, you said that you heard about this program offhand from a friend. How easy was it to fill out the application process? How long did it take? And did you feel like you needed some extra help on the outside to do it?
Once I read all the information, the fact sheets, I was ready to go. The application was not hard at all. I did call DOL first before I did it to make sure I didn't mess it up. And it was very straightforward. I don't think you need a third-party consultant to help you. I think DOL's support is fantastic. And so you can give them a quick call. They can walk you through it and you can do it yourself. I really think it's something that's easy for business owners to do. It's unlike the other applications we had to complete for funding.
Thanks, Donna. And if you check the chat on the side, everybody, there's a number that you can call for help, and also a website that you can go to that probably has frequently asked questions and all of the things that help you navigate the process.
And that will, that's in the presentation, and that will all be sent to every participant that's registered. So everybody will get that directly. Yep.
Thanks, Tom. A great question from Mike Silverstein. Our employees are paid a percentage of their production, not hourly, which is pretty common if you have a sales staff, for instance. But they are not salespeople in this case, and we are seasonal. Would we need to calculate their effective hourly wage? So if somebody is not salaried in the typical traditional fashion, but they're paid based upon some productivity arrangement, how does the shared work program work for that circumstance?
We might have to take that one offline, and if we'd like to, you know, get contact information, we could reach back out. That's sort of a, you know, very detailed question. I suspect it's going to be very fact specific, but we'll be happy to reach out and work with the person directly.
Okay, thanks. Here's a question on self-certification. Obviously, the employer certifies for the employees. What if the employer is one of the participants in the program themselves? Can they self-certify for everybody in the corporation or nonprofit, including themselves?
That is a very interesting question. I don't know that it has come up before. I'm going to pass on that for the moment because we might actually have to consult on that a little bit. But I will say this, it is normally not something, in normal times, this wouldn't really come up because in the case of well, especially in a for-profit business, for example, if you have a corporate officer or something like that, they would not generally be allowed on the plan. The corporate officers are based on long case law in the unemployment insurance system are considered not to be totally unemployed. They're always considered to be further in the interest of the business. We've really loosened some of the ways that we look at some of this during the pandemic because these are not normal times. So it is, you know, in the current environment, it is certainly possible that a corporate officer might not be able to further the business at all. And so we've been allowing the corporate officers to be on the plan. I don't recall that particular question having come up before, actually.
Donna, what do you do? I'm sorry, go ahead, Tom, if you were finishing.
No, that's okay, go ahead.
Yeah. Donna, what do you do to certify and how often?
Every Monday, I get a nice reminder email from the DOL that has the link. I click on the link, it takes me right to the website. I log in, and then I just go to the area where it says certify, and you have to fill in 2 boxes. 1, has your company permanently closed, yes or no? And 2, what is the % reduction? And then you hit submit, and that's it. And then our employees do the same thing on Mondays. They go in and certify their hours. And it's, you know, it's quick, and that's all you have to do once a week. And we change, you know, we vary. So it's nice because I have the flexibility right there on that 1 page to change the % reduction right there. It's 2 boxes.
Thanks, Donna. A question from Iris in the college sphere. Would faculty at a college qualify? For example, if there were reduced teaching loads?
There's nothing inherently that would prevent you know, using the program for those types of services. There are occasionally some very tricky questions that come up with regard to people in education in between semesters, where there's a exclusion under the unemployment insurance law. And I'm not exactly certain on the current status of that question. But in a more generalized way, there would be no problem with that.
Thanks, Tom. We have another specific question that relates to how this program relates to the PPP program under the CARES Act. That's the Paycheck Protection Program. Under the PPP loan forgiveness rules, that would allow a loan under the PPP to be turned into a grant that would not have to be paid back. Under those rules, wages cannot be reduced by more than 25%. Will the unemployment payment portion be included as paid wages for calculation of the 60% requirement under the PPP program? So it's a little bit specific and technical, but I'm just wondering, Susan or Tom, if you can shed a little bit of light on how payments under the shared work program could impact loan forgiveness under the PPP program.
The short answer is we really can't. We don't have any expertise with the PPP program. You know, I can tell you that to the extent that people are receiving payments, you know, as salary through the program, that would impact whether or not they would be considered totally unemployed for unemployment insurance purposes. But we have no expertise on the PPP program, I apologize to say. You know, a lot of these programs, you know, as we all know, they've come into existence really since March with the CARES Act, and it's been, you know, quite an interesting journey as we've gotten used to the implementation of the new legislation and the, you know, keeping up on the federal guidance that's come out with regard to the unemployment insurance provisions. But unfortunately, with regard to PPP, I really can't speak to that.
Yeah, I mean, the Triple P program forgiveness rules are complex and a little bit difficult to navigate. And what I would recommend to whoever asked the question is, who's ever working with you on loan forgiveness, your bank or your accountant or otherwise, they would probably be able to provide some helpful information to you.
Michael, that's actually what we've been kind of relaying to, because we've been getting a lot of questions around PPP. So we always tell them to go back to the bank or whomever they've been working with on their loan to see what the guidelines are under that.
Okay.
Michael, can I jump in again?
Of course, yeah.
It's clear in hearing the questions and the answers that as a program that was set up pre-COVID, it had certain constructs, and the Department of Labor is doing its very best to make it work well in this COVID environment where it really is a great tool. That being said, there are provisions in the law, the labor law, which governs this, that may require revisiting in this context. And as a legislator, that's part of my job, and as someone on the labor committee, to see how we can make this work more effectively, if not for this particular pandemic, for crises going forward. So one of the lessons learned of this program is there may be some specific legislative things that, working together with the Department of Labor and the governor's office, we can make work more effectively for a program that was not designed for this moment, but we are, with the Department of Labor's help, making it work for this moment. So I appreciate the specific questions raised, and where we have technical barriers or impediments that the Department of Labor can't find a sort of way to mount, we need to work together to try to improve the legislation so it works for every company. This is a moment of opportunity for this program, and I'm so appreciative that they're really trying to be flexible. There's a statute, that's a problem with laws. They're out there. So I'm sorry, Michael, I just had to get that in.
No, thank you for jumping in. We've got a few more minutes left before we hit that magical 1 hour mark, and hopefully everybody can hang around for just a couple of extra minutes because we do have some great questions. One question that came up is how this impacts the unemployment experience that a corporation may have if they participate in the program. And Susan, this may have been in your presentation, but I'll ask it again just to reinforce it. And this is a question from Ken. If I participate in the program as an employer, what happens to my unemployment insurance rate? Will it be increased next year, for instance?
It won't, I don't believe. I'm going to defer to Tom on that.
Yeah, so let me field that one. So normally that kind of goes back to what I was talking about before. In normal times, yes, that would impact the amount of charges on your account, which depending on how the numbers work out could raise your rate. In the current environment, the federal government is reimbursing the states, and it's not being charged to the employers for 100% of the shared work benefits. So, and through the end of this year, which is the last week ending the unemployment week in December of this year, those charges will not affect your account. Now, some of that you may still be for any employers who are receiving charge notices and that kind of thing, who might be on the plan or familiar with it. You may notice you're still showing those charges right now. We're still working our way through the programming and the systems work that needs to be done to make that reflected, but we are working on that.
Thanks, Tom. And Rachel asks a question for a corporation or company that's self-insured. Maybe she has a captive, although I'm not exactly sure how that would apply to responsibilities for paying unemployment insurance. I think it may be a little bit of a different issue, but I just want to put the question out there to you, Susan and Tom, in case it's something you've dealt with before. A self-insured corporate entity or nonprofit, how, if at all, does this affect them any differently?
So that's actually, and I'll take this one again, that's actually a really good question to raise here. Commonly people will use the term self-insured. It's actually just a different method under the law of discharging obligations under the unemployment insurance system. So you may hear us refer to it as a reimbursable employer. certain types of entities, and in this context, mostly it would be 501c3 nonprofits, have the option to elect, and it has to have been done ahead of time, the reimbursement option. And what they do is they don't pay into the system as they go, but if they lay people off, the state pays for those benefits, and then they're obligated to reimburse the state for those costs. You know, that's a risk reward, risk loss calculation, which is made in different times. And then in a time like this becomes really, really potentially devastating for some of the small nonprofit employers, because if you're paying 100% of the benefits, that can be very, very expensive. So the shared work program, if it is something that you can find a way to make work for your organization, is something that is really worthwhile to consider for a reimbursable employer while this program is still in place. Because since the federal government is reimbursing those costs through the CARES Act, those are direct dollar for dollar savings to the employer. For most employers, they are just a reduction in the amount of charges that might potentially raise their rate, but for a reimbursable employer, that's a dollar for dollar savings.
Thanks, Tom. And we're going to start to wrap things up, and we'll bring Senator Mayer and Donna back in for some closing thoughts. Just to remind everybody, information about this program is readily available on the Department of Labor website. The contact information for the specific participants today has been put in the chat room function on the side. And this particular presentation, which I think is being taped, Tom is going to circulate to all of the participants, and the WCA will make it available through their website as well. I have a couple of closing thoughts, and to broaden the conversation, we're at a point now in the Lower Hudson Valley where we've got about 13% unemployment. And unfortunately, we don't have an easy and quick solution to what's happening with the pandemic. The numbers are steady to slowly climbing, which is not a good sign. Eventually, we will obviously climb out of this recession, but we are currently in a recession. And since the first round of stimulus money was passed by the federal government back in March, unemployment has continued to climb in New York State. Senator Mayer has been very vocal, as has the WCA, about trying to pressure the federal government into an additional round of stimulus, particularly a package that helps provide relief to state and local governments. Because if we don't get that, then unemployment will continue to climb as public sector employees start getting laid off, at the same time that there will be a decline in the provision of essential public services and portions of the nonprofit safety net. So these would be self-inflicted wounds. You can't get another federal stimulus package. And I keep hammering that every time I get an opportunity. And the senator has circulated letters. She's spoken to our congressional delegations and people in Washington. So she's shown great leadership in trying to get additional stimulus money passed. There are also some additional programs available to small businesses that are being run at the county level, some of which comes from the CARES Act. And just to name a few, there's the Business First program. If you haven't already applied for that, you have to get it done by the end of today. Today is the deadline. That is a $49,000 amount of just simple grant money for businesses that have up to 99 employees. So if you've seen a significant decline in revenue due to the COVID-19 pandemic, go onto the county website and apply for this program in grant money. There's also the county's state disaster and emergency loan program that is, depending upon your circumstances, a $10,000 grant for small businesses and nonprofits, or a $25,000 loan for small businesses and nonprofits. And there's also the Westchester County Community Build Back Program, which is targeted for rental relief for struggling tenants. So there's a lot of other stuff that the county is trying to do to help small businesses, in addition to all of the fine work that the Department of Labor is doing at the state level. And of course, I'll say it once again, the federal government needs to pass additional stimulus money that helps state and local governments. I've said my piece. Senator Mayer, maybe you have a couple of words you want to add as well.
I'll just be brief. Thank you, Michael. Thank you, the Department of Labor, and thank you, Susan. Thank you, Donna. Yes, we need federal help for our state and local governments. We need it for small business and for business development. And frankly, we need it for our schools. I would be remiss if I didn't say that. We need targeted money. We are going to continue to push that. But in the interim, I'm just thinking of how important it would be if so many more of our businesses, I think of my McLean Avenue, I think of Main Street in New Rochelle, Westchester Avenue in Portchester, the more of these businesses that can come back to life using the tools that we have, the better it will be for the businesses and for our employees. So I just want to thank everyone for participating. I want to thank the county. I know Sherry Rosen Asher from the county has been on this call and made sure we got it to all our chamber partners. Thank you so much, County, for being a partner in everything we are doing to try to get through the other side. So with that, thank you. And I thought this was very informative. We have much less left to learn, but we will follow up directly with the Department of Labor, and thank you.
Thank you, Shelley, and thank you, Donna, for sharing your personal experience. Folks, you are looking at a small business owner who participated in this program, felt it to be very easy, and got a tremendous benefit out of it, Donna. So thank you very much.
Thank you. And don't forget what you said earlier about the recruitment costs. You know, we're a small business. We don't have the luxury of HR departments that can find new talent for us. So we put a lot of effort into hiring that talent. We wanted to retain them, and that's what this program allowed us to do. Can't even imagine how much money we would have to spend to get new talent on board. We wouldn't be able to do it. So thank you.
I'll make a quick mention though, since, sorry, I didn't mean to interrupt you, but I'll make a quick mention because I work on the workforce development side of the Department of Labor as well. And we do have recruiting assistance available too. So if anybody ever needs that, you know, reach out to us. We have a lot of hidden talents that we're willing to share. So.
Susan, thank you. Thanks for the great program today. All of the liner notes and the materials, they will be distributed to everybody who signed up to participate today. Thanks to all of the Toms at the Department of Labor for the technical stuff and some of the other questions about the program. And thanks to all of you for tuning in today to this. I hope to see you all soon. Take care and be safe.